Hello everybody. So I want to provide a quick update on the Nvidia price hikes and the many bear theses out there, both on IREN and Nebius. And both of these takes are like, oh, well, this is actually so bad for the Neoclouds. The Neoclouds are going to get squeezed. Look, there's a price hike. And it seems like the algorithm is only amplifying the negative takes, because if it bleeds, it leads. But in my view, this Nvidia news is actually very, very bullish for AI in general. It means that the demand is insensitive to pricing. It means that Nvidia saw it fit to increase the price again, and Nvidia probably doesn't think there's going to be that much of a difference in the demand. And so the news is this, of course, Nvidia raising the prices of the servers and the AI chips, containing the AI chips, right? So the main source of revenue for Nvidia, raising the prices by 15%, memory cost being a factor here. First of all, one thing I want to say, if you see the original report on this, said 17%. So I have no idea how this turned into 15 from 17%. They rounded it down, but this is actually more than 15%. This is a quite meaningful increase. And so this should obviously be very, very bullish for Nvidia. But the narrative is going crazy. And so you have a bunch of takes that are very viral on X talking about IREN and Nebius crashing over this because somehow the margins will get squeezed. And this is the problem with this type of stock, is that narrative may very well make the stocks crash. But at the end of the day, it is a narrative, right? This is the same thing as dilution news. We saw, was it White Fiber last week, who had dilution stock drop 30% or 20%. Baba's going to drop tomorrow, same on dilution. How many times do I say that dilution is technically neutral? Like, dilution is technically neutral. It's always been neutral. When a business dilutes, it dilutes at that valuation. It's just that the market has this perception that dilution is a bad thing, and so it drops the stock. And so you have this narrative circulating, which may make these stocks drop, but how much cheaper are we going to go? Don't get me wrong. If Nebius drops, I'll be a little happy, because I think Nebius ran too far too fast. I think Nebius could drop a little bit. IREN, I'm not so sure needs to drop, because IREN is already pretty dirt cheap at $41. On my spreadsheet, IREN is the cheapest out of the three Neoclouds, and right now it looks like the most attractive, at least in my view. Now, I often try to look at Hyperliquid. As you know on the channel, I've covered the token as an investment, but there's another use for Hyperliquid, which is to see what assets are trading on the weekend on Hyperliquid. And if you look at all of these free assets on Hyperliquid right now, you have IREN up 1.5%, you have Nebius up 2%, and you have Nvidia up 1.5%. Now, technically, this is not that meaningful, right? Because all of the volume starts on Sunday night in the US, and then, of course, tomorrow market open. That's when the meaningful moves happen. But nonetheless, this is all we got. And so when I look at all we got, despite the low volume, I see the sector up as a whole. And I think this is what it should be. I think the sector should be up as a whole. It means the demand is so big that we can raise prices, and we're not fearful that raising prices will lead to a meaningful drop in demand, which is not the case for other industries. In most other industries, if you raise prices, the demand pretty much drops, right? It's elasticity. We don't see much elasticity on Nvidia's product. The demand is inflexible, and people are going to pay what they need to pay. But unfortunately, this is not the news that you see amplified right now, because social media works. If it bleeds, it leads. Just like if I wrote my video, if my thumbnail I had bad for AI, I probably would get more views than if I write good for AI. But how could Nvidia's ability to pass on such huge price hikes, 17%, how could not that be bullish for the whole space? And even if you were to think this is bullish for just Nvidia, well, guess what? There's a lot of people who own Nvidia as part of a basket, as part of an AI basket. So the tide lifts all boats. The Nvidia tide should lift the sector as a whole. To me, this is a very bullish news. The market just doesn't want to believe it. Now, of course, as you know, I've called Nvidia undervalued for just about a year in a row. I mean, it moved from 180 to like 214 in a year. It really hasn't moved compared to the leadership position, and even compared to the revenue growth, right? The revenue has moved 3 times as fast. The revenue growth has moved 3 times as fast for Nvidia as the stock price has moved. The stock price has been stuck in a little bit of a valley of despair, even though we have a slight up. It's slightly up, but really not that much. And a lot of over Max 7 did run more. Like if I look at Microsoft or if I look at Apple, their nosebleed valuation. If I look at Nvidia is one of the cheapest out there. Absent Meta, of course, but Meta has its own idiosyncratic issues with that lawsuit. But Nvidia, short of idiosyncratic problems that these companies may have, Nvidia clearly is the cheapest to me, at least to me. So this is a very bullish news, and we'll see what happens on Monday and on Wednesday night / Thursday morning when they report earnings. Another sector that is primed to benefit on this is Micron and SKHY Hynix, which is high bandwidth memory and memory in general, because of course the bottleneck right now is memory, is high bandwidth memory, these multi-layer stacks of memory that are packaged with GPUs, that come attached with GPUs. And actually, if you look at the industry more closely, SK Hynix is actually the leader in that space, much more than Micron. Micron is actually neck and neck with Samsung in the space, but the leader is actually SK Hynix. And when I look at the valuation of SK Hynix versus Micron, I find that SK Hynix is actually slightly cheaper than Micron. And of course, this is a classic dichotomy that we see whenever we have a US stock and a non-US stock. The US stock is always more expensive, and I guess we just have to accept that fact that US stocks will always trade at a premium to foreign stocks. At least that fact has held for a very, very long time. But nonetheless, the valuation gap is very real. Relatively, I find SK Hynix much cheaper than Micron. One of my problems, though, when I look at memory is that I'm not sure the drop is done. I'm not sure the FUD is done. We have September coming. It's a very volatile month. September is historically a very volatile month. So I'm not so sure we're not going to get opportunities to add for the Micron and the SK Hynixes of the world. To a lesser extent, we could have an opportunity to add to Nebius too. I believe you look at CoreWeave, CoreWeave a little bit, but you look at IREN, you look at Cypher, I believe they're pretty darn low. But if you look at Nebius, if we get a few bad weeks in September, if we get that upcoming week, if we get some macro earthquake, macro turmoil on Friday, I believe there could be an opportunity to get them cheaper. But anyways, let me conclude this video. My take on IREN and Nebius. So I think Nebius would be you could argue that Nebius could be a little bit more impacted by this than IREN, because Nebius has already signed a lot of contracts already. IREN only delivered and signed. They signed multiple things, but they only delivered one. They only did Horizon 1 at IREN, right? Nebius, on the other hand, they signed a lot of deals. So you could argue that this news on the price hikes may impact Nebius more than IREN. But I'm not even sure about that, because when you look at contracts of this size, typically you lock in your pricing before. And given that Nebius has received a $2 billion investment from Nvidia, and given that they are a priority for Nvidia, I have a hard time not imagining that there is either orders that have been locked on the one hand, or maybe some sort of price escalation in case an adverse pricing event happens. I would have a hard time digging into these contracts and thinking that they haven't included something to the sort of mitigating some raising prices. That's for point number one. But because Nebius is more advanced in rolling out the Neocloud data centers, I could argue that Nebius perhaps is a little more impacted than IREN. But the other thing, the flip side of the coin to that, is that if you look at Nebius's latest earnings report, they've moved to more short-term renting. And so if you do short-term renting, if you don't do long-term contracts, if you do short-term contracts, then that issue is moot, because as soon as the prices increase, you can increase your prices. You can renew at higher prices as soon as those prices increase. So I think Nebius, just from the fact that they have long-term contracts, they may not be able to increase the price of compute, but that does not necessarily mean a loss. That just means that they would stay steady. Companies that have short-term contracts or who have not rented out or contracted out their entire capacity yet can update their pricing now that GPU compute is more expensive. You can now charge more. And so I've said that about Nebius before. The upside of being so early is that of course you're first in the race and you're far ahead of everybody else. The downside is that you may have undersold and under-negotiated some of your contracts. Now, as far as IREN, I think IREN, to me, this would have to be at least neutral, if not bullish for IREN, because IREN can incorporate the hikes into whatever it has left to sign, and it has a lot to sign, right? There's 5 gigawatts worth of stuff. I mean, down the road, right? It's going to take until 2032, but they have a lot coming up to sign at IREN, and my view is that they'll be able to incorporate these hikes. So this to me, in the grand scheme of things, this is bullish for the entire sector. You could argue that it's a little more bullish for IREN than Nebius, but I'm not even so sure. And if I look at Hyperliquid, I see everything down. Now the problem is that the market is so narrative driven that all it takes is a few powerful tweets on X to get tens of millions of views and eyeballs, and CNBC picking it up, and then there you go. You could have a down day on Monday. But to me, this is overall a very good news for the sector. So anyways, this was not investment advice. This is not financial advice. This is only entertainment on this channel. Always only entertainment. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.